Today on the show, we're talking about everyone's favorite topic, taxes, and specifically how to pay as little as possible. Retail trading is booming right now, NFTs are on fire, and Robinhood has driven trading costs to nearly zero. But there is one area of finance that has yet to be democratized for consumers, and that's taxes. So our guest today is Jaimin Desai, founder and CEO of Reconcile Money, a platform that tracks your investments across crypto, NFTs, stocks, and minimizes how much you have to pay out to the IRS every year. Reconcile is an early stage company, but when we launched Just Raise with Workweek, we did a 100K giveaway to a founder who was just setting out. And Jaimin and Reconcile were the winners. So I'm happy to have him on today, and I'm excited to dive into how crypto is taxed and why brokerages haven't solved this problem already and why they're actually incentivized not to. I hope you enjoyed this conversation with Jaimin Desai, founder of Reconcile Money. All right, well, Jaimin, it is awesome to have you on the show. I am really excited to talk about this, especially given that I have bought NFTs and apparently made major mistakes on taxes because I wasn't really paying much attention to taxes at the time. So with that in mind, can you start us off on what is Reconcile Money and why this is critically important to the huge number of people who have started playing with NFTs this year?
So what we're building is for clients and folks like you guys to be able to link all of your different investment accounts, whether that's your Robinhoods, your Coinbases, MetaMasks, AngelList, whatever it is that you have money into. You can link that through our portal. You'll have a tax professional that's matched up with you to be able to see your portfolio in real time, and then the both of you can kind of game plan what to buy or sell or what moves to make in order to bring that tax liability down. We really spun this up after seeing all these retail investors over the past 2 years, like buying and selling options like crazy, doing the same with crypto and NFTs, and not really realizing that like each flip counts as a taxable moment. And then over time, seeing those taxable moments add up to large, 5 to 6 figure tax bills. And so what we're really looking to do is provide that transparency for both the tax professional and the client in real time, so they know what to expect, and then kind of can take actions and steps ahead of time.
So you are aggregating all of the crypto transactions across wallets, looking at things like what trades I've made, identifying potential wash trades, or when it'll be safe to sell something and still be able to harvest long-term capital gains tax, for instance, and then showing all of that to you in a platform so that you know how you should be trading and like how you can strategize to best optimize your tax.
And the key thing with us is that it's not just you on the platform. You also have a tax professional, whether that's an accountant or a financial planner or a lawyer on the platform as well, to be able to guide you with the knowledge that they have.
And so one of the things that I didn't realize when I got into this space is that, like you said, every time you buy a cryptocurrency with another cryptocurrency. So you buy an NFT with Ethereum, you buy Bitcoin with Ethereum. Anytime you use Uniswap to buy anything, that counts as a taxable event, which in a lot of ways makes sense, but in others kind of doesn't or isn't intuitive because you're just transferring from one piece of crypto to another or one token to another. But that I think is probably something that that will trip people up the most.
Yeah, exactly. And especially because a lot of folks, and I'll just blame it on their like naivete, but they think because crypto is like digital or it's untrackable that they can get away with not paying taxes, which is just completely wrong.
Which is actually funny because crypto is probably the most trackable type of financial transaction you can have. I mean, it's literally anyone can look it up. Right. I can't look up your credit card statement, but if I know what your wallet is, I can actually look up everything you've ever spent money on.
Right.
Even if that's just listing an NFT, not even selling it. I guess the trick is identifying whose wallet is whose, but if you can track that back to Coinbase and you can track people's money from their accounts into Coinbase or other exchanges, it's pretty easily enforceable, I would imagine.
Yeah, exactly. And that's why I was, when I hear things like that, I remind people that give the IRS a couple of years, they'll be able to track this down pretty quickly for you. There's actually, I think, a big court case with Coinbase and the IRS in which the IRS was telling Coinbase, well, you got to give me all your customer data. Coinbase, being that they're kind of privacy first, didn't want to do that. Guess who won that battle? And now Coinbase gives all of your data to the IRS at the end of every year, right? So you can presumably think that MetaMask and all these different wallets that are popping up will have the same reporting requirements pretty soon. And then once that's the case, well, MetaMask is probably going to go back to the IRS and say, hey, here are all of our wallet addresses, and then here's all the transactions underneath those. And then the IRS will go back to you and say, hey, Joe, like, I know this was your wallet address. Like, why didn't you tell me about all this stuff? And then, you kind of have to have a better answer than, oh, I didn't know about this when the IRS comes calling.
And I don't think there have been many high profile cases really with tax evasion involving crypto yet, but it's also an incredibly new space. Is that something we've seen this far as enforcement?
It's coming. I know. I think every time I've looked into this space, you've heard some sort of like congressman or president now with Biden releasing something on it, or the federal bank saying enforcement is a necessary precaution against what they say fraud, tax evasion, all these different types of things. Um, and the way I see it, like if there's a lot of money to be made, I'm sure the IRS wants its piece of the pie. So like, I guess while now are the kind of glory days of making money in crypto, I wouldn't say like that should continue to be expected moving forward.
Yeah, I guess given the tax it's gotten from people in positions of power, it might be a good idea to pay your taxes on your crypto. Well, to go back to the beginning here, how did you get interested in this space? How did you end up building a tax aggregator type platform for uh, crypto?
Yeah, so I had a problem myself about last year, 2021, after I'd kind of started to become a bit more actively investing in the stock market. And so like I saw my tax bill and I was like, oh my God, like I wish I'd kind of game planned for this before. I wish Robinhood was giving me kind of like a real-time update with how much I owe based on my gains and losses. So I didn't have to pay this kind of big, fat tax bill. And then I realized there's millions of other folks just like me who were day trading while at home with nothing to do because of COVID, right? Um, not really realizing the tax implications of what they're doing. And, that was from the stock market perspective. But then more broadly, I really realized no investor today really has a good idea of how much they owe unless they're using an accountant. And that too, it's not like the accountant goes in every day and like crunches the numbers to give you an update of what's going on. So, what I really wanted to do here was give that kind of power and democratize access to this information to the regular folks like us, so we don't make mistakes that kind of set us back, thousands of dollars in taxes every year.
I have also had problems with those kinds of things, but I don't typically quit my job and start a company to fix them. What was kind of that catalyst that made you take the jump here?
Yeah, well, actually, Reconcile's story is about 3 years old now, and this new kind of pivot into what Reconciles today was about a year old. So, I can kind of say that what made us change our tune there was really understanding that like this tax space is such a big market. I mean, if you think about it, like the only real player in town that anyone knows about is Intuit, and nobody really likes Intuit, right? So you're talking about a humongous industry that has, yearly demand actually, that no one's really tackling. And for me, it was something that where my background in finance and accounting kind of played well with what the space needed. And so for me, it was just really like a nice founder problem fit of me having the problem, but also having the expertise to understand how to kind of go about fixing this.
What's top of mind for you now, moving forward, now that you're working on a seed round and in the process of launching the beta?
I think it's really becoming technically sound here. You really need good quality data in order to make the best kind of assumptions from that, from the brokerage accounts, from your wallets, from all these different investment platforms that you're trading on. If we can kind of gather that information, well, then we can kind of pass that along to you and your accountant to make sure you guys are both seeing the same information the right way. And then as we stream that in real time too, you can make the best decision as to like what we should do right now. Right. So if we get bad data in, it's almost like where you're going to get bad data back to the end client. So de-risking that is, I think, my number one priority right now.
Yeah, I mean, that seems to always be the problem with aggregators. And in general, I'm not a big fan of like personal finance aggregation platforms. But what you're doing is kind of fundamentally different because you offer this tax angle. And that's something that really no one else offers. You know, there are lots of fintech consumer platforms and even crypto consumer platforms, but none of them talk about taxes, which is probably the least understood and maybe most important piece of trading, especially for retail and day traders. And if you work at a hedge fund or run a hedge fund, that is fully integrated into your systems. But consumer apps just haven't seemed to figure that out yet. Do you think there's a reason why this just hasn't been a thing yet? I think the why now is pretty obvious looking at what's happened over the last few years, but why it hasn't been solved already?
Yeah, I've got a couple guesses there. So, like, first and foremost, brokerage platforms over the last 20 years have really been more, catered for the high net worth individual. It's really only in the last like 5, 7 years when, with the rise of Robinhood, where all these other E-Trade, Fidelity, Charles Schwab, all those guys kind of started to cater to the kind of retail investor like ourselves. Prior to that, there was really like, oh, if you make 6 figures or 7 figures, you'll trade on these platforms and then we'll suck you into our like wealth management experience. And then using one of our wealth managers, we'll give you this kind of tax advice and tax information. So it was almost like that solution was being given, but it was only, it was kind of behind this red velvet rope for high net worth individuals. And if you kind of think about like the retail banking or brokerage experiences on those apps too, you can still see they're lagging behind the Robinhood and Publics of the world, right? So there's no real investment or need for those guys to get into the space. And then with the Robinhood and Publics, I mean, their main goal is really to get more users on the platform and trading a lot. Showing them tax information is actually probably a net negative for their top line because people will trade less once they realize what's going on with the tax implications there. So it's almost like a really bad incentive problem. Not to mention the potential like regulatory risk there is of, giving bad tax advice and then getting sued by the end customer there. So for those two reasons, I feel like it's not been a big of a deal. But I mean, touching back on what you said before, like there's so many more budgeting apps out there than tax apps, even though like with what we're doing, I can probably save a customer or client, a couple $1,000s off one trade, which is more than any budgeting app could do like in the entire history of using a budgeting app.
Yeah, exactly. Which is huge. It sounds like for a Robinhood, they don't want to give me any tax advice or any financial advice. They just want to be the platform, which is something you hear often with all platforms and all bad things that happen on them. And then the second piece is that it would actually be bad for their business if I saw what was happening when I'm, day trading or making short calls or just doing all types of leveraged option trading. Which I don't do, but if I did.
Because if you think about it, like they don't tell you when you're wash sailing, they just have you unfortunately find out for yourself after the year, right? Like
even if I'm like 6 days short.
Yeah, exactly. If they had a button that's like, Joe, don't do this, like, it's gonna be a wash sale and these are the implications. Well, like that button alone could probably it'd save people a lot of money, but then it also probably hurt Robinhood's revenue in terms of people trading a lot less. So,
yeah. Whereas you are almost building the positive brokerage experience that is designed to help people save money on their taxes. And you are actually confronting the fact that you are going to be giving people tax advice and you could be sued if you gave bad advice.
Well, that's where we pass that liability off to the tax professional that we work with. And part of the reason why we kind of switched from selling to, investors directly and selling to tax professionals, so that like we're putting the proper tool in the, expert's hand as opposed to giving this to a novice like ourselves.
Ah,
It's kind of like the example I give is like, giving a surgeon a better needle or knife versus giving that to us and saying like, oh, stitch yourself up, right? Like I wouldn't even know how to do that. But if I gave it to a surgeon, he'd be like, oh, I know how to use this and I can do this. I can do my job a bit more efficiently and safely now, as opposed to having to use the older tools.
that's something that's changed. It sounds like a few times is that you were initially going after consumers and now you're selling directly to advisors who will then sell to consumers. Are you still going to have a consumer push or are you aiming to sell to the tax advisors who then sell to their clients?
It's a bit of both. I mean, the core business is like selling to the tax professional, and then they'll invite their clients to get on board and sign up for the platform. And then on the side, like we get like I get inbound messages in my DMs every week asking for help finding a crypto tax accountant or something related to taxes. And so for me, it's great to see these guys wanting to work with professionals. And so what we'll do is partner them up with tax pros that we know that are looking for more clients. And so it's kind of a win-win on all fronts, right? If you're a client or if you're a new prospective client, you get a tax professional to work with and you can use Reconcile. If you're an existing client, you get to use Reconcile for free. And then if you're a tax professional, you get not only get leads, but then you also get a tool that'll help you, save time from servicing your clients, but also be able to give them the better, better proactive guidance that they really want as well.
I have actually been meaning to go look for a crypto savvy tax advisor because, yeah, I mean, I bought NFTs with a MetaMask account. The project I'm in airdropped me an NFT, which was suddenly worth like $15,000 when they gave it to me. And now the price has crashed and I haven't sold it. But I think I have to pay taxes on like the price at airdrop. So it's really interesting, also very complex. And yeah, I mean, that alone, connecting tax advisors in crypto with the Web3 community, especially with kind of the Web3 native Twitter presence you have and the high end design that looks like it's a modern product, that alone, I imagine, could be a business right there.
Yeah, I mean that's been the go-to market so far. In fact, my our tax lawyer and I were just talking about this yesterday. That airdrop thing you mentioned is a really big deal that not enough people talk about, especially because most often people claim these airdrops like right when they hit, right? And during that time is like the highest potential of a squeeze. And so like when you claim the airdrop, it typically counts as ordinary income, which means it gets taxed the same tax rate as your kind of regular job, which is like, anywhere from probably like 20 to 40% of your income, which is super high. But if it crashes like it did in your scenario and you sell it at like a big loss, that counts as a capital gain loss and you can only deduct $3,000 of that loss against your income. So it's almost like you're bound to pay more tax even though this thing is now worthless and junk. So
And what's interesting there is you talk about claiming it. So saying like anybody who has this address or has this thing can now go get one of these NFTs and we'll give it to you. And then they can go claim it. Mine wasn't claimed. They just airdropped it into my wallet. Like I didn't ask for it. I was just holding something else and it was like given as a gift, which is wild that that can even be a thing that can happen. But yeah, it's just showed up and I imagine now I have to pay taxes on it.
well, in that case, you could probably claim that you didn't want it or ask for it if you had no like prior knowledge. Anyway, that would be, not tax advice here, but that's the kind of stance I'd probably take when claiming that because it's one of those things where, and unfortunately in the space, like people can spam your account with a lot of different things. And it's not like you've asked for it. It's just that someone has my wallet address and then it's like an email, right? But like instead of getting spam email worth nothing, I can get a spam airdrop worth 15K out of the blue, even though I didn't ask for that. So.
Which I did want it. It's hard to claim I didn't want free money, but you know,
But now I don't because it's worth nothing.
I never say this at the top, but this is not financial advice. And given you're in this space, the crypto space, building an app here, there's so much going on. Is there anything you find really interesting in the kind of ecosystem?
I see a couple things. One, and this is something I love the most, every asset class seems to be getting fractionalized and democratized now.
Yeah.
A few years ago, like our parents' portfolios was probably some mix of like stocks and bonds. And now like my portfolio is filled with, like wine bottles and real estate that I own like $10 worth of, and stocks and crypto and NFTs and everything else. So it's really nice to see the diversification, accessibility aspect to like the regular Joe. Whereas before that was only available if you were like a multimillionaire, right? So that's one thing. And then the second thing is I think you're starting to see some really crazy, cool business models being sprung up in crypto, especially in DeFi, where it's like, the ability to create, liquidity pools from scratch from people in Australia and China and the US, right? Whereas before you'd have to do all this KYC stuff and you'd have to have, I don't even know how you would do that with traditional finance, but with crypto, the fact that you can, I think, is just amazing. But in some ways, it makes the tax reporting so much harder because it feels like the product innovation is outpacing the kind of documentation and reporting of these things, which makes it really hard for anyone to kind of keep track of the tax liability there.
In a lot of ways, it sounds like finance has been democratized. So I can invest in a house, like you said, or I can invest in real estate, I can invest in wine, I can invest in $1 million LeBron James card. But the tax piece, which is also a huge piece for high net worth individuals who used to have access to all these financial tools and indexes or all these different financial structures, that hasn't been democratized at all.
Right.
And that's really where Reconcile money comes in, it sounds like.
Exactly. And it goes to like my point earlier, which was the product innovation is outpacing the reporting requirement. So like a lot of these platforms like, VinoVest or On Rally Road, they're not giving you the reporting that you really need. In fact, I think many of them don't even give you kind of a 1099, which is kind of the standard document you kind of get from like a brokerage account. And so you at the end of the year have no real easy way to kind of go back and figure out how much tax you're supposed to pay here, right? So that's kind of where we want to step in and make sure like everyone knows what's good without you having to kind of go back and spend hours like tracking which exact, wine bottle you bought and how much you bought it for and how much it sold for and all that type of stuff.
Do you have any idea what the average tax bill is for someone who, I don't know, day trades on Robinhood actively or is actively buying NFTs? Are we talking like, I mean, it depends how much they made, of course, but what kind of ranges are we looking at?
I've been trying to find that answer out for a while. It's one of those problems for me in that like you don't know what you don't know. So a lot of folks have big tax bills, but they have no idea what they are, so they can't really answer that question. But I've seen some crazy stories so far from our accounting friends. One of which is this Robinhood trader who had like $45,000 in profits only, but owed $800,000 in tax
How is that possible?
because of wash sales. So the dude had like,
Gotcha.
from what I remember from the story, he had like 45 million or something in gains, like $42 million or something like that in losses. And so it was one of those things where like because he kept wash sailing, the like taxable gain portion was a lot higher than obviously the kind of like net bottom line gain. So he probably got taxed on like $2-3 million of like taxable gains, but in reality he only had 45,000 kind of like actual gains.
Wow. That is wild.
That's
Yeah.
one story, but I mean, I've heard many other instances of folks, especially, and I'm sure this will happen this year with NFTs. Like, they've minted some Bored Apes, and now they minted them under their own name. They didn't have like a business entity, which they did that under, so they can't even like hide that income or pass through it. And they were going crazy, flipping that they can buy some cool cats to flip that, so they can buy some doodles and there's definitely a lot, I'm sure, of tax fraud and evasion that'll happen this year. But I can almost guarantee those guys are facing 5-6 figure tax bills for sure.
And especially if you don't want to sell said Bored Ape, or if you bought that Bored Ape and then bought something else that you don't want to sell and you didn't factor in for your taxes, you now have a large bill and no liquidity.
Yeah, and in fact, it's. I'm really interested to see what happens kind of April, May in the crypto space if a lot of these folks have to sell some crypto to pay the tax bill that's coming, or that's actually due for them. Uh, and it kind of sucks because now like they may have had that Ethereum or bought, back when it was like 4,500, and now that it's 2,500, it's like, well, shit.
Yeah.
I've got to sell all this at a huge loss, which I can't even really use to offset these taxes right now for this year.
Yeah. And just about everything is down, whether you have your money in the market or, well, maybe they bought oil, but in general, yeah.
Yeah, I think it was like negative $37 a barrel, maybe.
Hmm.
But see, and that's, I mean, these kind of problem scenarios that I'm talking about is pretty much why, I felt so confident to start Reconcile, because had that person had, gotten tax advice before he kind of, clicked sell, well, they could have figured out like what the best strategy would have been, right? Maybe it would have been to like donate this punk or this NFT to a charity, and then take back some of those tax savings to offset other, losses he wanted to make. So it's just a bunch of different strategies that you can pull together. The problem is once something's realized already, it's really hard to kind of do anything about it. But if you kind of game plan it in advance, well, then you can really do some cool, clever tricks, and essentially do what Donald Trump, Jeff Bezos, and every other rich person in the world probably does, which is like you know uh, tax plan legally or illegally in some way, to make it worth your while.
I think you have a viral Twitter thread there, or at least some good marketing material.
I'm waiting for the right moment. Once Donald or Elon or someone talks about taxes, I'm ready to bounce right back with that thread. I'd say, just I love connecting people with tax pros. So if you know of anyone, for any listener on the show, if you're looking for a tax professional, whether that's an accountant, a lawyer, or like a financial planner or wealth advisor, happy to make intros for you guys. I've got like 300-400 folks on our database that are looking for clients. So, happy to kind of help you guys save a lot of money on taxes and help build, your long-term wealth.
I would love to get connected to one of those for sure. You're going to have that as a button on your website sometime soon. So has the beta launched yet?
What we've done is done a bunch of design sprints. So it's been like prototype. So it's more of an alpha than a beta. And we just actually finished that, which is where we're kind of building the beta out right now and aiming to have that out by the end of this month and late March, early April.
Yeah. So I guess that's the rational question is when can I get my hands on this and start using it for taxes?
Most likely early May. What we'll do is pair you up with the tax pro that we know is using Reconcile, and then you two can kind of work on this together. And so, for 2022, it'll be a tax planning tool. And then by the end of the year, we're hoping to kind of have our tax prep and tax filing tools integrated as well. So that way your tax professional can kind of get to your taxes sooner rather than having to wait until, March, April, which unfortunately is kind of the busiest season for them to take on new clients.
Well, that's fascinating. And I do have to do my taxes sometime soon. So my last question for everybody on the show is about your vision for the company. Where would you like to see Reconcile in, I know you're not that old yet, so 5 or 10 years from now?
I'd love to be a global platform to help every, new investor get paired up with proper tax professionals, and just save money on taxes. It's not like I'm an anti-tax person, but I truly think tax is like the number one expense people really have if you kind of think about it. And so if I can help you save even a fraction of that, it's almost like I'm giving you a raise on your salary automatically, right? And then you can use that newfound wealth or income rather to build long-term wealth by keeping it invested in the stock market or crypto market, wherever it might be, right? So I truly think this is kind of like a wealth transfer I'm doing for folks that don't necessarily have access to Donald Trump's accountants or Jeff Bezos' accounts, right? Like we're kind of democratizing access to those smart people to the rest of the world. And I truly think that if we can do that globally, you're talking about potentially putting a big dent in all this wealth inequality we have.
Those are the exact kind of fintechs that I like to talk to. And that's a fantastic vision. Thanks so much for coming on the show.
Thank you, Joe. Happy to have you.